Good afternoon, ladies and gentlemen, and welcome one and all to this afternoon's Non-Farm Payroll live trading event. Hope you're doing well out there, team. You'll have to bear with me probably on and off throughout the session, as I seem to be having that same damn issue with the mouse. I have no idea what this is. It's been absolutely fine all day. Can't help but think it's something to do with an unstable connection or something. Not that that should affect a mouse by any stretch, but yeah, I mean there's nothing wrong with the mouse as far as I'm aware. It's got a brand new battery in it as well, so but it just keeps lagging out on Trading View. It just makes it really glitchy for some reason. Anyway, if you could give me a quick sound check, please, team, that would be great, and then we can start the show officially. All good, excellent. Thanks, Bacon Dude. Good to see you here, man. Excellent. Good afternoon to you, Scotty D. Good to see you, buddy. You can see we got H&C in the house as well. We got Jack in the house. Hey guys, hope you're doing well. Good afternoon to everyone out there on YouTube as well. See, we've got a couple of people out there. Hope you guys are doing well, ready and raring for the afternoon. Now, as you would have been made aware, so long as you were reading the script to the introduction on the introduction video, it's probably going to be a little bit of a non-impact event today for the non-farm payroll, with more emphasis being applied to average hourly earnings and unemployment. Now, the unemployment figure itself is looking stable. So we're not looking actually at too much of a change there at all. But the annual average hourly earnings rate is indeed looking as though it's changing a bit. So let me just come up there. So average hourly earnings month over month is looking at 0.3%, which is the same as the prior figure. We are looking at an additional 16,000 jobs being added to the economy this time around, which is the hardly anything. Just so you're aware, that's not really much of a change at all. Unemployment rate is remaining stable at this stage at 4.4%. Now, that's all relatively stable data, but the annual average hourly earnings data, not the monthly, but the annual data, is looking at a 2% decline. That's the only sort of notable call out there in changing the data. So, look, guys, I've said this throughout the beginning of the week. We probably are looking at a bit of a non-impact event today. It's not a surprise. It shouldn't come as a surprise if not much happens. Nevertheless, we are going to push ahead and we are going to get some trades planned and up on the board, and ultimately, see where things go. And if there is a bit of a shock, then fantastic. Hopefully we'll be able to walk away with a few quid in the bank. If not, nothing will trigger. We will remove the pending orders and then we will look to place ourselves in some pendings for the latter half of the week. With the understanding, of course, that we do have the CPI out on Friday, which is the biggest news event of this week. That's where the real action is going to happen. So we will push on ahead. We'll push on ahead. See where things end up. So our trading assets for this afternoon, we are going to be looking at the Euro USD. We are going to be looking at the USD versus the Japanese yen. We're going to be looking at gold, and we are, of course, going to be checking out those US indices. They're going to be our main trading assets. So we'll start right from the bottom and go up from the USD yen. So USD yen at the moment, nice big corrective following a whopping move to the downside. We've got a really nice point of inflection down here where we can see the change of hands in the market. So we had the big initial sell-off, we had the bounce back, and then we've had this really nice big sell-off again. Currently trading at 153.60 with the DXY currently trading at 96.717. It is finding support down there at the moment, and this is ultimately like our breaker structure area, I suppose you could say. But it is finding support on top of it. You can see the move slowing down here into this afternoon's NFP. So it is going to be a bit of a decision point today. With the USD yen where it's trading at the moment, we have a couple of viable opportunities, which is great for us. We like that. The USD yen, first of all, looking at that area there, it's got a great target profit for a long. The break of structure for this long is going to be probably this one now. We don't have a choice because we are trading above this area. That's going to be our bearish trade idea in a minute. So that's going to be the break of structure for the long. And we are looking at jumping in at around 153.757 with a target profit up there at around 154.044. and a stop loss nicely tucked in behind the scenes there at 1 to 2.47, and that's going to be at 153.64. Nice little intraday trade. Price time ratio, you're probably looking at about maybe 5 minutes, 5 to 10 minutes, so long as there's a nice big impact event from the non-farm payroll. Of course, chances are there isn't going to be, but that's on the proviso that there is. The short opportunity is of equal quality. We have this area in here, rebound, retest, nice area, sort of structural point. We have a TRF situated at 153.40, which is about 10 pips below, but we're not really gonna mind that too much. And then of course we are looking at the extreme low down here, which is one hell of a move down. Or we've got the slightly less optimistic approach, which is having it there. And this is sort of the temporary floor that we had in the expansion period of this market before we get that run to the upside. This is absolutely gorgeous. I love this. So it would be a good opportunity, I think. Whoops, don't mean to do that. It would be the good opportunity, I think, between there and here. So let's drag that one in. Stop loss is going to be about 153.59, say 58.59 for a 1 to 3 risk reward. This essentially acting as our no man's land. Now, the fact is, team, we will probably get tagged into one of these, and it may well be a loser. Okay, just being really, really honest about this, we will probably look at a loser on the USD yen. I'm not too fussed. We're going to cut down that risk. We don't want to be risking too much at all from our accounts this afternoon. We're relying heavily upon the volatility strike from the news event to generate that significant risk reward ratio. That's where the sort of accumulation of returns are going to be generated. So what we're looking at here is maybe a 0.2% of your account on one of these, maybe a 0.15 if you've got a large enough account. If you're trading a 50 to 100k account on a prop form, or you're demo trading, for example, 0.2 is going to be the sweet spot. And then we're ultimately looking for that risk reward ratio to come in. Now, based on the last 3 non-farm payroll events, the slippage. Actually, no, I beg your pardon. The 3 NFPs ago, it was actually quite volatile. 2 non-farm payroll events. The last 2 were very, very slow, and so the spread variations were actually not too bad. They were quite tight, and you would have gotten some pretty good fills. I remember getting a really decent fill on the NFP before the last one, as a result of the fact that there wasn't really too much of a surprise element. It was quite controlled. So I don't think we're going to be looking at too much of a spread variation today either, which means much of the risk reward that we see on the screens right now is probably going to be available to us this afternoon as well. So that's going to be the USD versus the Japanese yen. I'll knock that one out straight away for you all. We don't want to be hanging around here at all. So there you go, USD yen. So second up on the list is the Euro USD. Now the Euro USD at the moment got a pretty decent range up at the highs here at the moment on the 15-minute time frame. It's following a really nice big move to the upside, currently trading at 119. Let's start building this out. So we've got the highs up there. We've got the 1, 2, 3. Well, we've actually got four attempts at this area. It's come back down each time. We bring this down here. We've probably what to do. I'm thinking, I mean, if we want to take a short trade, it's going to have to be below these lows. So I think it would make sense to use the full scale of the range for our range trade. Unfortunately for the euro dollar, we're not going to be able to look at any longs immediately. I'm not happy based on the NFP figures today in terms of the expectations to set up any potential long post 119.30. That's because I just don't believe the data has the power to push price action that far. I would be happy taking a long, obviously, from the low, and then I would utilize this area in here, arguably, as the breaker structure for that long. So, for example, the market comes down, we break into this area at the floor here, then we come back above. This area is absolutely necessary, part of the process. Excuse me, we've got the entry, the target, and of course, your stop loss, which would be situated in there for a 1 to 3.5. Very, very nice little trade idea there. So that could be the potential long for the euro dollar. If you're looking short this afternoon, it's a difficult one. I was thinking there was going to be a clean cut short available, but there's actually not. Yeah, it's a difficult one. So we've got this area in here, which is going to cause headache. We can't take a short in between there. The margins aren't available. And so therefore the opportunity, the real opportunity lies underneath, which is going to be that area. And that creates quite a significant no man's land in the euro dollar. The fact is, we have to ask ourselves the question here: do we believe that the data today supports a move down in the euro USD of 0.5%, when the average range at the moment in the euro dollar over the course of the last maybe 2 weeks has been about 0.3% daily change at a push, unless there's anything significant that DT comes out with, which he, hasn't been. So it's a difficult one. It's a real difficult one. The average trading range, and I'm purely speculating here, but from the last maybe 60 non-farm payrolls has been maybe 0.25% of the euro USD in either direction. It doesn't support big moves anymore. That's kind of saved for inflation data like CPI and PCE even sometimes. So I'm really struggling to see the potential for a short here. So I might have to stand back from that one. The potential for a run down into sort of 118.90 and then get the reversal back up to 119.25 certainly could be on the cards, but I think I'm going to leave the short for the time being. Moving up to gold. Actually, not before I send you that. Make sure you guys are all reviewing the chat, by the way, because that's where they're being sent. There you go. So the next up, we've got gold. Now, gold at the moment is trading up at liquidity highs at 50.80, which is really good to see. That's a lovely area to consider shorting from. Again, though, are we seriously looking at the non-farm payroll today pushing gold down to 48.83? I don't see it, team. I just don't see it. The data doesn't support that move. It doesn't have the power. So I would be looking at something perhaps a little bit more pessimistic. We've got an ascending level up through there at the moment. Very broad strokes, but we can still build that in. We have a break of structure for this trading opportunity, which would fall about there. And the trading opportunity, the true trading opportunity, would lie between those two margins, which I am happy with. I mean, that's still looking at a yield of around a 1 to 3, and we'll be in and out of the market in that one, I'd like to think, in the space of 15 to 30 minutes. As far as a long is concerned in gold, don't like it at all. We need a break close and a retest on the 15-minute time frame before we can even consider jumping into this one long today. So, I think what we'll do, we can put an alarm in gold for the long, but I don't think that's something that we're going to realistically be taking together on the session, considering I'll, probably be on for 45 minutes to an hour today. And I think that's going to take at least 45 minutes to an hour to complete the BCR before we even potentially see the opportunity for the long. However, the Euro USD is a long only in terms of its opportunity availability today, which is ultimately buying the euro versus the dollar, so it's selling the dollar. If we look at the only availability in gold, we are buying the dollar. So we're selling the dollar in the euro and we're buying the dollar in gold. Okay, that's what's going on here. So in an actual fact, thinking about portfolio balancing here, we've got decent exposure on both sides of the market, because if the dollar's bid, we've got the opportunity for that. If the dollar's sold, we've got the opportunity for that as well. So it's perfect. It's a good balance, and I'm happy with the outcome of that one. So we can download that and fire that out to you guys here. Oh, come on. The mouse doing its thing. There we go. So that's gold. Right, next up, US indices. We are currently at 317, which is good. It's going to give me time for a change to punch some numbers in. Usually I'm typing away like a madman in the space of 5 minutes trying to get all my pending orders locked in before the release. So looking at the Dow Jones today, looks like a complete murder scene now there, guys. I mean, look at that. There is no part of the chart that's looking pretty today, is there? Yeah, there's no part of this chart that's looking pretty today. I still think the margins that we have previously been working in have weight. I mean, they definitely have weight. Just look at the recent price action. So I'm quite comfortable using these margins again. All we need to do is just drag them over to the right-hand side. This is a real problem, isn't it? This is a real problem. I have to spend some money on another mouse for no apparent reason. There we go. Yeah, that'll do. So what we're looking at here for the Dow Jones this afternoon is the short below the break of structure point. Now make no mistake, the market has come down here a couple of times and it has triggered some short traps. But that was at 7:30 in the evening, not during the US Open hours. So I'm hoping things might be different. We're looking at a target profit around 50.032, but please don't pay too much attention to the actual price of my Dow Jones chart because it probably will differ in comparison to yours. Focus more on the zoning because that will be pretty much the same no matter what you're looking at. So short there for the Dow Jones this afternoon. In terms of a long, not really a fan. The breaker structure of the high could pave the way for a trade up to 50.45, but that's a pretty big move away from where we are at the moment. However, the US indices do tend to move more. They are more sensitive to economic data like the non-farm payroll rather than the FX space. So, possible structural breakout of this level here could pave the way for the long above. Just have to be prepared for the fact that we may see a tag and no follow through. But again, we're keeping our risk tight. The maximum we should be putting on the line today, the maximum is, if we lose every single trade, we're not going to be down over 1%. So if we lose every single trade today, 1% down. Okay, that's where you want to be. So just bear that in mind, okay? And anticipate the losses. Don't anticipate the wins, anticipate the losses because it will lessen the blow for you. And if you're an emotional trader, you should try not to be. But if you are an emotional trader, then what's 1%? It's and it probably won't be 1% because the law of large numbers would indicate that at least one of them is going to be a winner. And at the risk reward ratio of a 1 to 2 or a 1 to 3, you're going to be gaining back 1 or 2 or 3 losers. So you should be fine, as we always are. Now, in terms of the NAS 100, I don't like the short availability here. We have big liquidity beneath price action at the moment. The path of least resistance for this one is too far away from the market value currently. But I do like the long. There is legs in the long. So what we're going to do here is drag this one over to the right-hand side. We're going to utilize the level directly above price for the break of structure. And we're ultimately going to be repeating the process that we were looking at just a day ago or so. Come on. This is really winding me up, to be honest. I don't know what it is. Something's happening. I wonder if it's something to do with the stream, maybe on Discord. I could be doing it as well. So looking at approximately a 1 to 3.28 on the Dow Jones long. I'm actually going to avoid the S&P today. I don't want the increased exposure. I'm happy with the Dow and the NAS 100, and then with the inclusion of our precious metal and our FX instruments as well. So we'll download that one. So we've got the NAS 100, and I don't believe I sent you the Dow Jones, did I? So bear with me. We'll get the Dow sent over as well. Whopping old no man's land on that one, but it does limit the chances of being tagged into the trade, of course, and therefore mitigate some of that technical risk. Let's go up here to the Dow. There we go. All right, team. So just to conclude then, we have the USD yen, the Euro USD, gold, NAS 100, and the US 30 Dow Jones as our primary non-farm payroll trading opportunities. We know that the maximum we are risking this afternoon is 0.2% of your account, no matter what, per trade. We know that the risk reward ratios are significantly increased, and so therefore the return on investment for each of these trading opportunities is going to be greatly more than your market risk, which is great. That's what we want. We also know that if we lose all of the trades, we're going to be down about 1%. And the chances of that are very, very slim, considering the fact that we are priced on both sides of the market. So if one goes one way, something else in our portfolios today is going to be going another. We've got everything balanced out. The risk is in check. The technical risk factors are known. We've got great trading margins on most of the trading assets. We also have the inclusion of the gold and the euro USD counter trades. We've got a bit of a hedge going on there. So if the market goes one way, it's not like we're going to be able to, we're not going to be able to make some money on that via one of the other trades, gold or the euro dollar. So all things are looking pretty good. Now, just to confirm, we have 7 minutes to go until the NFP event takes place. Perfect amount of time for you to get away, start plugging some numbers in. If you are following today just purely for the educational purposes, of course, as you all should be, then of course, that's great. Plug your numbers in anyway on your demo accounts and follow along in the process, which is more important than anything else that we do here at the UTC. If you are using real money or you are trading on your prop accounts, then please, please, please adhere to the risk parameters. That is the magic here. Okay, it is not the strategy. It is not anything else. It is the fact that the risk strategy is foolproof. And let's get it done. So give me a moment. I will be back. Just going to plug in some numbers for a couple of minutes. Also take the time if you have any questions. If you're not trading this afternoon, ask any questions you like in the chat and I'll get back to those ASAP. All right, ladies and gentlemen, let's get ready for it then. We've got about 2 minutes to go for the non-farm data. Numbers are punched in. Apart from my mouse problems, which don't seem to be lagging anywhere than trading on TradingView's screen, which is even stranger. But just bear with. We're going to try and get through these charts as quickly as possible. Let's get the open. Yeah, great. Okay. Let's get ready. Let's hope something's going to happen. We've got about a minute to go here, guys. Remember, I will receive the data. I mean, obviously, you guys should have your own. You should have your own charts open and stuff like that, of course. But at the time I receive the data, because of the delay on the session, it will be coming out to you a couple seconds behind. Good afternoon to everyone else in this group as well. I realise we've got loads of people jumped in. Cora Tim, good afternoon to you, buddy. We've got Abdul in the room as well. We've got Sarah here. Hey, good to see you all. Right, we've got about 30 seconds to go here, team. All right, let's get ready for it. We've got 20 seconds to go. Okay, 10 seconds. 5, 4, 3, 2, and 1. Wow. Okay, we got some. Oh my God, we've actually got some huge numbers, guys. Some huge numbers. I did take a loss, but I got a win on the USD yen straight away. Average hourly earnings is 0.4%. My God, that's a 0.3% increase on average hourly earnings. Non-farms at 130k jobs added over a 48k previous figure. That's a whopping gain. Really big NFP number. 4.3% on the unemployment rate. This is some really bullish data here, guys. Really bullish data. Private non-farms at 172 over 64. for the private for the private non-farm figures. Average hourly earnings annual data at 3.7%. My God, we actually got an immense print. That's a really bullish print there from the US employment numbers. Really bullish indeed. Euro USD, look at that one, guys. Boom. We should have taken that damn short, shouldn't we? Look at that short. Straight the way down would have been a clear-cut winner. What a shame. Gold. Yeah, that's triggered, but not doing great at the moment. We've got US 30 Dow Jones, same as gold in the NAS 100 at the moment as well. So we've got some exposure out there at this time. Hanging on. The US 30 Dow Jones hasn't reacted as I expected it would, but I think the market's just got to digest the data. I'm quite confident that we will see a good read from the US 30 Dow Jones over the course of the next 10 minutes or so. NAS 100 as well is doing quite well, a bit better than the US 30 Dow Jones, but we did have a better and more aggressive entry on that one. Jack Buckle's got a winning cable. Good man, Jack. Well done. Yeah, beautiful move. This is a. You can probably tell by the elation in my voice. I'm actually very surprised. Happily surprised. It's nice to have a bit of a surprise event from the non-farm payroll data. This is a really big print. A really big print. 130k over 50. I mean, that's a big beat on the data. Reduced unemployment, increased average hourly earnings. I mean, this is a real good bit of data here for the US, especially for the US employment situation as well. DXY currently trading at 97.20. Big move up at the DXY. Probably see this bleed out into the afternoon as well. There's no reason why we shouldn't. So I'll probably see a bit of bullish momentum here for the rest of the day now with the DXY, I'd imagine. I don't think we'll see too many of these very stereotypical sort of V reversals that we do get, those market correctors. May see some nice price action pullbacks tomorrow. See, this is the great thing, because if you miss the initial run like we have done on some of these opportunities, there's no reason why we can't just profit on the other side of it tomorrow. It's always a good day trading the day after as well. It does, however, mean that we're probably not going to look at filling our boots with alt asset class opportunities this afternoon, though. That's the downside of it, because at the end of the day, the markets are going to be now very reactive to what's happened, and they're going to be thrown out. So we're going to have to sort of disavow most of what we did. You know, we did think was going to happen. That's such a shame about that USD yen. That literally went down, just looking at my TWS here, that literally went down to a tick, tagged the trade, and then reversed, went the other way. Gold is struggling. That's a bit of a shame. I would have expected more of a move in gold, especially from this kind of data. But again, like the Dow Jones, we'll see possibly the continuation of that this afternoon. But very limited response from gold. I was expecting a lot more from gold from a print like that in the non-farm payroll today. A lot more. DXY now trading at 97.20, 202-ish. Has come back a little bit from the highs. That's fine. It's just being reactive. Very surprised in gold. Yeah, very surprised. US 30 Dow Jones almost at TP. That's good stuff. The NAS 100 doing well as well. About 65% of the way there, maybe 70% of the way there at the moment. So a couple of really nice runs on these US indices. Jack says, I put my idea on cable on the Trading Lounge. If you have time to review it, mate, when you can. Yeah, of course. Yeah, no problem at all, Jack. I'm happy to. Yeah, we can check that out for sure. Let me have a guzzle of my coffee. Well, I think we should be absolutely chuffed. Not necessarily as a result of the trades, but more the result that we've got an actual NFP that's interesting. Makes one hell of a change, right? I don't know if any of these trades are actually going to be completed before we get off this afternoon, but that's all right. That's fine. Right, I'm going to take a moment just to go back over to the Traders Lounge and check out Jack's trading opportunity. Oh, wow. Yeah, that's a beast. That is really good. There is some criticism for it. So let's forward this into the community events stage where we are at the moment. Then everybody can take a good look. That's Jack's trade from this afternoon's NFP team. Have a good look at that one. It's a really nice opportunity. We're going to have a little look at that. Let's go down here to cable. So let's line this up on the chart first of all. We've got a 136.84 entry. 136.84. That's going to put us about 136.84 is going to put us about there somewhere. 84. It's just a little bit lower than that as far as I'm going to eyeball this because the price, your mouse is hovering above the entry. I think the entry is just below that. So I'm going to say it's about there by the looks of things. We've got a stop loss, which is just there. And we've got the target profit, which is honestly right down at the bottom of the move, which is very impressive indeed. So let's review this for a moment. First of all, the risk reward at 1 to 2.66 is absolutely fantastic. That's really good. The stop loss. So if I was looking at this chart and I was looking for a point of liquidity here, I would certainly be going back, looking left, saying to myself, right, we've got a lot of highs in the market here. Let's try and incorporate as many of those as possible, get all those highs in, get these highs in. It's not the highest point, but it's the one that's got the most response. It's the one that's got the most commercial activity taking place. Commercial activity meaning where the market goes in one direction and then the longs turn to shorts and it comes back down again. We can see evidence of this happening over and over again. So that's really good. Really, really good. Great use of the liquidity there. Jack, you've got yours in. Your liquidity zone is a bit higher than that. You've got yours up here. Nevertheless, though, it's still looking good. You've still got the concept well underway there. Now, looking for the shorting opportunity, obviously you're trading away from liquidity, so you're trading with commercial interest, which again is really, really good. I'm loving that. Really good to see. Your target profit, I think, is arguably a little bit ambiguous. We've got a point of liquidity in here, okay, which is from this low. We've got the retest there. We've got the highs and everything in here. And we've got the base of the order block there as well before we get that nice big commercial move to the upside. So if I'm looking at this as in setting up a new fresh trade idea, that is going to be my target profit for this trade. Now, yes, the risk reward is diminished to a 1 to 1.84, but that's not my choice. I have to work with what the margins tell me, with where the commercial interest is. And this would be my TP. I wouldn't necessarily be looking for that. If I look down, the next point of interest for me is probably about there. The reason being is because this is where the market consolidated before gathering enough orders to break out long and then traverse its way up to 136.97. So then my TP would have been either, well, from that level, it would have been down at this level at 135.95, which then subsequently means that we would not have taken the trade. We wouldn't have taken the trade. We wouldn't have hit the target profit. So I am a little bit curious at how we got that TP, in particular. Not that it wasn't a good move, but interestingly enough, Jack, it's interesting with what we were just discussing last night in around the 4 main loops and how we can look at something perhaps that we made possibly a slight mistake with, or we didn't exactly follow a process on, but it works out, and then your mind rewards you for making the wrong decision, and then you continue making the wrong decisions. It's something that me and Jack discussed last night, and let's hope it doesn't fall into that. But I would like to hear your thought process on why the target profit was at 136.10. So that's what I would say about that. The other thing is the entry for this one at 136.82-ish. I'm not entirely sure where yours was to the tick. But I actually think that's pretty good. I mean, if you're taking a NFP trade and you were aware that the data was coming out and that was the opportunity that you wanted to run with for this afternoon, I'm impressed. Yeah, consider me impressed. I mean, if we consolidate the chart, if we scrunch it up, that's not a bad break of structure point. We've got a lot of trading activity going on around here at the moment. We can see the market's been rebounding and retesting it all the way through here. It's quite well established. So I'm actually really impressed with that break of structure element, and I really like that. I applaud you for using that. We did get tagged into the trade quite early. It was running from around 12:15, so we were in the trade prior to the non-farm payroll event taking place, which is something that I would probably try and refrain from doing. I'm not saying that you were wrong to do that, but I would try and refrain from doing that if it's all possible. Because if we have market exposure prior to a major event like this, it does mean that we are leaving ourselves open to increased chances of trades being taken out. And that's because if the data came out as good as it was today, if it came out, what's the term? Sorry, if it came out like that bad, if it was the bad version of that data and we got negative prints across the board, the market would have blown through the top. You probably would have been affected by slippage in this instance and lost more than you actually originally risked. So if you put 0.2% risk in the market, you could have you could have certainly lost 0.3 as a result of that. So just a few bits to remember for the future. But overall, really like the trade idea. The main question I have is, where did that target profit come from? That's the main question. But apart from that, really solid trade idea. It doesn't look like from the daily change that we've got much movement on which one? The NAS 100, sorry. Yeah, the US 30 Dow Jones, I've already seen that's completed. We'll check that one out in a minute. But the NAS 100 struggling. And also gold, guys, is right here. We are literally holding on by a smidge. It's actually come up even higher than this. We've come up really, really close to this whilst I've been chewing the fat on the cable trade. That looks like it's probably going to be a stop out, unfortunately. The Euro US, which is really surprising, by the way. Unsure of that. Unsure of why that's happening. I mean, the dollar index has actually come down now as well, even after such a strong print. So maybe we're going to see the continuation of this over the course of the next couple of hours, is what I would anticipate. We do have a win and a loss in the USD yen, which is absolutely insane. Look at the size of this doji, this disgusting candle that we've got here. So we do have a win and a loss in that one. The Euro USD, of course, is the Euro USD. That's probably the biggest regret of this afternoon. We've got gold at the moment, which isn't doing anything. Probably going to be a stop out in any moment. We've got the US 30 Dow Jones, which is a beautiful win for a 1 to 2.72. I'll give you the confirmed entries when I update the trades in a little bit. I think. Oh, just bear with me for a minute. It's 358. Yeah, so that 358 is my actual entry on that one. So come down here. Price is where are we? Entry. There we go. 358. 358. And that is 31. Okay, so that's actually a 1 to 2.1 confirmed on the US 30 Dow Jones on that, which is still great. I'm still really happy with that one. It's not a problem. And yeah, and that's about it. So, I mean, look, overall, we've got a couple of losers and a couple of winners. We're in the green. We've made money, which is great. We certainly haven't made enough to go down the pub and celebrate, but we've made enough where it's not been a complete waste of time, which is the main thing. It's been a really, really good session this afternoon so far as well. I'm still very confident in the continuation of bullish volume in the US tech stocks. So I think we're going to add that one probably to the winners, which is going to be great for us as well. My entry, the confirmed entry on this one for the NAS is, what's that, 230. And that's 01. So 230 and then 01. So that's going to yield a 1 to 2.78. Which is absolutely brilliant. Really happy with that. And if we get this one, as well as the Dow Jones, as well as the USD Yen long, we are really nicely in profit for this afternoon's NFP trading session, which sets us up really nicely as well for this afternoon's US market open, where hopefully we can look at the reversal from the highs, considering we're trading longs at the moment. US 30 Dow Jones, NAS 100, we're coming up to these big points of liquidity here. And I would anticipate this afternoon the market coming back down, retesting designated areas of liquidity, and then trading trend continuation from that point on. So we're certainly going to be able to make some good money today. We're certainly going to be able to make some good bank. Jack Buckles says, I placed the TP on the 1 hour chart. Looking back, I see where I went wrong. I added a photo in the Traders Lounge. No problem at all, mate. No worries. I'll check that out. I'll check that out in a moment. But that being said, great trading opportunity, and thanks for posting it as well. It's good to see what you guys have got going on. God, we've got even more people in the group now. Good afternoon to you, Davison. Good to see you, buddy. And we've also got Ali in the room as well. Good to see you as well, man. So, at this stage, I am confident in the NAS. We've got that going on at the moment. Gold is a knockout. We've got, I think the Euro USD is definitely my biggest regret today. Yeah, definitely the biggest regret today. Should have had that in. That was such a nice trade idea. Perfect TP placement and everything. Yeah, it was a good one. Nevertheless, what are you going to do? I think that's about it, really. I don't have anything more to mention at this stage. Yeah, nothing more to mention at this stage. So just to confirm then for this afternoon's US Open team, okay, we are ultimately looking for price action to either retest. What time is it now? We're at 147. So I'm ultimately looking for price action to either retest these points of liquidity before getting going now. So let me just drag these along. Just so I don't forget where I am. We've got the retest of this area in here. Okay. And then we're looking at the continuation. So we'll be looking for the continuation either up to this level in here, or alternatively the high right up at the top. And so your trade idea for this afternoon's event is going to be this in here, or straight the way up to the previous high. I'm going to sneeze. Bless me. Knew that was coming. And we've got the NAS 100 this afternoon after we hit our target profit, which I'm really hoping we do in the next sort of 15 minutes or so, whereby I will be anticipating a short from up here, the highs, back down to the breaker structure point. And then we can see where we end up after that. I mean, frankly, if we come down here, we'll be coming down here. That'll take us an hour or so. And then that's going to put us at 3:30 this afternoon, by which time we're really going to be wanting to walk away. I mean, from that point on, we don't really want to be messing around with anything else today because of the aftermath of the non-farm. And yeah, I mean, to be honest, well, there's nothing more for us to do, right? Not much else for us to do. So everybody relatively clear on the US Open plan for this afternoon. And on top of that, does anybody have any questions? Anybody got any questions at all about, yeah, how we've done today? What the non-farm data could mean moving forwards? I'm going to be back, of course, in the community event stage on Friday to host the CPI live trading event as well. So I'll be there. All of you are obviously welcome and invited to that one. That's going to be a good bit of fun, hopefully. Clear core, Tim. Yeah, good man. I know some of you guys are working at the moment, so you won't be able to respond. That's fine. All clear. All clear. Yeah, good. Well, listen, team. You know, it's an active afternoon. I'm going to be trading the US Open as well. Hopefully, you've enjoyed this afternoon. You've learned something, and we've all had a little bit of fun. I think it was a nice change of pace. Certainly, having an NFP that meant something for a change. It's got to be the first one that I can remember for a long time where we actually had a decent bit of data to use. I'm glad to hear it, Bacon Dude. Yeah, it's good to have you back as well, buddy. So I suppose I will wrap things up there then. We'll just have one last check on that NAS. Yeah, that's pretty damn close to target profit. So hopefully we'll see that one drop in the bag in the next 15 to 20 minutes, I would say. Really, really hoping it does. I don't want to be in it by the time the bell rings at the US Open, to be honest. But it is what it is. It's a solid trade, so I don't think there's any cause for concern. So yeah, wrap it up there. So, team, thanks for joining me this afternoon for our live UTC NFP trading event. Thanks to everybody on YouTube as well who got involved on that side of things. Remember, if you do want to join in on a more regular basis, you can join in the trading community. There is a free membership, and if you want this kind of content every single day, you are more than welcome to join on the UTC Trader Plan, where you get this every single day, just as I mentioned. If not, then I look forward to catching you in the next one. Like I said, I will be back for the broader, wider community on Friday for the live CPI trading event. And for those of you who are UTC trading members, I will, of course, catch you in the next couple of hours and then tomorrow as well. So take care of yourselves out there. It was a pleasure as always, team, and I look forward to catching you in the next one. Take care, good luck, trade safe, and I'll see you then. Thanks a lot. Bye-bye.